Hey, what's up, fam? It's your guy Manny with another episode of Money Says. Today, I want to talk about a macro event that drove the stock market in another direction to yesterday. As you know, Meta, AMD, ANET, and Qualcomm released earnings yesterday, and most of them were really, really good. Um, there were increases that were driven post market yesterday and pre market today. But then there was one event that changed things. Well, let's go into details what exactly happened, what it means, and maybe what you should do coming out of it. Now, as you know, guys, if you like this content, please definitely give it a thumbs up and subscribe to the channel. There's going to be a lot more content coming over the days and the months, maybe the years. So I'll see you in the next section. So the reason why that 10-year yield is down is because this report came out today, manufacturing PMI, which tracks the a bunch of things from a manufacturing perspective. But anything about lower than 50% is not a great thing from a production, inventory, demand perspective as well, because it means that there's less being manufactured by the United States of America. And so if you look at the ISM PMI was essentially up, essentially on a bit of an increase all the way through. I mean, we had a little bit of a blip in February, and if you look at February's 10-year yield, that's also one of the lowest in the last 52 weeks. Um, so we had a bit of a blip in when we had a little bit of a good increase coming into the start of the year. Then we had a blip in February. Then we had one in March. Then we had a good increase in March. And I think at this point, people would have thought, oh, it's trending in the right direction. And then we had a shocking July. And the July is not mentioned over here, but July is sequentially is what they look at in these reports. Is down quite quite a lot at 46.8, which is the main reason why. So going back into this report again, I love this report. Manufacturing PMI is basically an index that is made up of five sub-indexes: new orders, production, employment, inventories, and backlog of orders. If we scroll down into these sections, tech investor for the most part. So I'm looking for things like computer equipment. I'm looking for things like um, uh, things like semiconductors, um, things of that nature. Maybe even electrical equipment, just because data center is a big focus of mine. Equipment industry, and as we saw in this report, new orders were new orders were, I believe, higher for computer equipment. So new orders were higher for computer equipment. Production was lower, and inventory was lower. And as we said previously, those are the three indexes that matter, because new orders, production, and inventory. Because employment, something that we cannot, we don't have a sight into the future, and prices are increasing, and backlog orders are more or less flat. So I'm gonna look into someone like Dell. Dell's earnings are coming up. It was one of the hardware stocks that's touted as one of the winners in the AI, the overall artificial intelligence and data center space. Them and SMCI compete in this area, in the areas of the actual equipment that goes into those data centers. Um, and Dell, as from a trend perspective, this is the 52-week chart on Dell. Dell was reached a high around the earnings around, I believe, 179. Yeah, closed 79 on that day, and then the stock cratered because of a variety of reasons. Their forecast really didn't reflect what the market was perceiving at that point. There was some optimism that crept in at that after that earnings release report. Again, went up to about 165, more or less, and then since that time, really hasn't done well at all. And I'd say overall, if I was an investor in Dell, this is basically what I would say is a short-term strong sell. There is the Fibonacci says that it's in bear territory, and there's a head and shoulders appearing. But let's look into the details of, hey, there is a sell-off today in Dell as well, and the computer equipment industry has been pointed as one of the ones where new orders went up, production went down, inventories went down. So let's look into the financials. So if I go here and I click into more financials, I can very easily just go into statements, and I can look at the income statement. And so this is this is left to right from oldest to most recent. Now they have yet to announce results of Q2 results, but last quarter the revenue went up. So new orders is not, I mean, it's not entirely new orders specific, but obviously it's driven out of mostly out of new orders. Is came out of it came at 5.79% year-on-year growth, and is pretty much sort of flat sequentially, be improving on the trend between Q4 2022 versus Q1. So between Q4 and Q1, there's was quite a large drop. They managed to maintain that. It's more or less flat, I'd say, year-on-year increase. So I'd say where new orders went up, Dell is in compliance with that trend. It is showing in up 5.79. In terms of the production, production can be viewed as a couple of different ways. I'm producing more, so therefore I should have more inventory, and therefore if I go into the balance sheet and open the total assets, then open total current assets, I go into inventory and I see here again left to right, oldest to most recent. Inventory is 6.17, 4.78. I think over here, I'd say 6.17 is really one of the anomalies. And we can look at some of the ratios that help us spot the anomalies. But I'd say the last 6 quarters, or last 6 quarters, 4.78 has been on the high, and inventory is actually increasing. So between Q4 and Q1, they increased inventory. When someone increases inventory, they do it because they need to they need to essentially, biggest drivers is they're beefing up their stock to take care of the demand that's coming in. So where the PMI was saying that the inventories went down for the entire computer and equipment or electronics industry, Dell actually went up last quarter. And obviously that the PMI is a little bit more recent, and we'll see what comes out of the Dell report, but that's what I'm seeing in the last report. From a statistic, if I look into statistics, this is one of the good ratios to look at: inventory turnover. This is basically, I'm not going to go into the formula, but basically what it says is an inventory ratio of 15 means that that's the number of times in a year that the company is refreshing their inventory. So Dell, being a producer or manufacturer of hardware equipment, and they're essentially restocking their inventory 15 times, it means that it takes less than 30 days for their inventory to be refreshed, which is a great story. This is really not slowed down. I don't see 16.19 is a down, is a trend for 15.79. They're well above industry standards, and basically means that if anything, Dell needs to probably restock more. But as long as they're able to meet demand, this is actually a good story. So, would I use the PMI and then trade Dell down? No. But there are other reasons why I would trade Dell down. One, because of what I'm thinking as the earnings report might come out as, and things of that nature, or short-term technicals. But if I then go into AMD, AMD is also one of the manufacturers, or the maker. While they don't make chips directly, they outsource the making. The U.S. outsources making to mostly Taiwan. How's that looking today? So this is down a lot. AMD after yesterday is down by 8.1%. That's quite a large, not quite a large. That's a huge decrease. And they did release financials yesterday, or they did release earnings yesterday. And if I look at the same stats there, so if I go into statements, and if I go into income statement, and I go here, Q1 2024, I mean, they've yet to release they put the Q2 ones over here. But if I then go into Yahoo Finance, and if I go into AMD, I believe the increase was something around, um, so quarterly as $5.8 billion and $5.3 billion. So increase of about 9%. So really good from a new order benchmark standpoint, and then from a production and production and a inventory standpoint. If I go into the balance sheet, total assets again, and go into total current assets, inventory is quite healthy. They're increasing in inventory just like Dell. If I go into the most recent financials on balance sheet and I go into, just remember to click quarterly, inventory is also increasing for the most recent quarter. It's $4.9 billion. So they're ramping up for demand. Whether that might happen or not is another story. History has said it does, and so that's what's happening. From a statistics standpoint, um, inventory turnover is going down. So it's definitely going down. So they're definitely beefing up their inventory more. I'd say an inventory ratio for AMD is a little bit of a concern. I'd say three is 4 to 6 is really a standard you want to have. But 3 times means that it's also, given the fact that they're not actually making the chips themselves, you sort of take that into account and say they're refreshing their entire stock by about 3 4 times, 3 to 4 times every year. Um, it's a little lower, but it's not of concern, and it's never been of concern for AMD in the past. So that's how I'm viewing this macro data for AMD and Dell, guys. Guys, stock market's down because the yield is down. The yield is down because there's pessimism in the economy. There's pessimism in the economy because the ISM PMI is down, and the ISM PMI is down because of a variety of sub indexes that are down. Be interesting to see what comes out of it, at least from a pessimism or an optimism perspective, how people trade on it. But it's not looking that great out there. The S&P is continuing its declines, and let's see what comes out of it. I mean, I think there are some really good trades out there, where if I'm benchmarking this ISM PMI data, as we've seen in the earlier part of the video, if I'm benchmarking that to the data on an individual stock basis, there's definitely arbitrages out there. And there's select industries that were hit hard. Some of the industries were not. For example, banks were not, and people continue to use that as safe haven. I did mention that I'd look at Bitcoin, so let's talk about that real quick. Bitcoin's been a little volatile, extra volatile lately. Trump had his conference, and Trump's conference essentially indicated that things were good for Bitcoin. You can check out Trump's video on YouTube of the things he said, and there was a lot of optimism aftermarket, or aftermarket trading on a Saturday. But then the U.S. government essentially started downloading some Silk Route Bitcoin that they had seized, which are essentially fraud and essentially illegal Bitcoin that they had seized, which they started to sell essentially on a Monday. I mean, it's funny how it happened on the Monday, but politics aside, that was the reason that the Bitcoin has been a little bit of a decline. And today's pessimism has crept into Bitcoin as well. I mean, generally speaking, interest rates, any interest rate increases should drive Bitcoin, should drive Bitcoin higher, or price increases should drive Bitcoin higher, because inflation, it's a safeguard for inflation. But really, we've not seen that happening. There's variety of other reasons why that's not been happening. People using that as a risk asset, so on and so forth, or to hedge their risk. So that's it, guys, for me. Your guy Manny from Money Says. Please like, share, and subscribe, and I'll come back to you guys with more content. See you guys around.